Chapter 1. The Psychology of Investing. Introduction. The world of investing is often characterized by a delicate interplay between logic and emotion. While financial analysis and data-driven strategies play a crucial role in making informed decisions, psychological factors can exert a powerful influence on investor behavior. This chapter delves into the psychological underpinnings of investment decisions, highlighting how emotions can often cloud judgment and lead to suboptimal outcomes. The power of impulse. One of the most common psychological pitfalls in investing is the tendency to make impulsive decisions driven by greed and fear. The allure of quick profits can lead investors to chase after high-risk, high-reward opportunities without considering the potential downside. Conversely, the fear of loss can cause investors to panic and sell their assets at the bottom of the market. The blood in the streets mentality, which refers to the tendency to buy assets when they are perceived to be undervalued due to a market downturn, can be particularly dangerous. While it may seem like a bargain at the time, it is important to remember that the market may have good reasons for pricing the asset so low. Impulsive decisions made in the heat of the moment can often lead to significant financial losses. The importance of emotional mastery. To make sound investment decisions, it is essential to develop emotional mastery. This involves understanding one's own biases and developing strategies to mitigate their impact. Some of the most common psychological biases that can influence investment behavior include confirmation bias, the tendency to seek out information that confirms one's existing beliefs and to discount information that contradicts them. Anchoring bias, the tendency to rely too heavily on the first piece of information encountered when making a decision. Herding behavior, the tendency to follow the crowd and make investment decisions based on the actions of others. Loss aversion, the tendency to feel the pain of a loss more acutely than the pleasure of a gain. By recognizing these biases and understanding how they can influence your decision-making, you can take steps to counteract their effects. This may involve seeking out diverse perspectives, conducting thorough research, and setting strict stop-loss orders to limit potential losses. The role of learning. Continuous learning is essential for success in the investment world. By staying informed about underlying assets, macro conditions, and the mechanics of profit generation, investors can make more informed decisions and avoid common pitfalls. It is important to understand the fundamentals of the companies you are investing in, including their business model, financial health, and competitive advantage. Additionally, staying up to date on macroeconomic trends can help you identify potential opportunities and risks. By developing a solid understanding of the investment landscape, you can make more rational decisions and increase your chances of achieving long-term financial success. Conclusion. The psychology of investing is a complex subject that can have a profound impact on investment outcomes. By understanding the common psychological pitfalls and developing strategies to mitigate their effects, investors can improve their decision-making and increase their chances of achieving long-term financial success. Chapter 2. Avoiding common investment pitfalls. One of the most common pitfalls investors fall into is the tendency to blindly follow trends and invest in popular assets without conducting thorough due diligence. This phenomenon, often referred to as hive mind behavior, can lead to significant financial losses. When everyone is buying the same asset, it is often a sign of overvaluation. It is crucial to avoid getting caught up in the hype and to conduct independent analysis to make informed investment decisions. Cognitive biases can exert a powerful influence on investment decision-making, often leading to irrational and suboptimal choices. This chapter explores some of the most common cognitive biases that investors should be aware of and how to avoid falling victim to them. The gambler's fallacy. One of the most well-known cognitive biases is the gambler's fallacy. This fallacy occurs when people believe that past events can influence future outcomes, even if the events are independent of each other. For example, if a coin has landed on heads 5 times in a row, some people may mistakenly believe that it is more likely to land on tails the next time. However, the outcome of each coin flip is purely random and unaffected by previous results. The recency bias. Another common cognitive bias is the recency bias, which is the tendency to overestimate the likelihood of events that have occurred recently. For example, if the stock market has been rising for several months, investors may mistakenly believe that it is more likely to continue rising in the future. However, Past performance is not necessarily indicative of future results, and it is important to consider other factors when making investment decisions. Confirmation bias. Confirmation bias is the tendency to seek out information that confirms our existing beliefs and to ignore or discount information that contradicts them. This bias can lead investors to make biased judgments and overlook potential risks. Anchoring bias. Anchoring bias occurs when people rely too heavily on the first piece of information they encounter when making a decision. For example, if an investor sees a stock price that has been declining for several months, they may be reluctant to buy it even if the stock is undervalued. Hindsight bias. Hindsight bias is the tendency to believe that past events were more predictable than they actually were. This bias can lead investors to overestimate their ability to forecast future events and make poor investment decisions. Avoiding cognitive biases. To avoid falling victim to cognitive biases, it is important to be aware of their existence and take steps to counteract their effects. Some strategies include conducting thorough research, gather information from multiple sources, and avoid relying solely on anecdotal evidence or personal opinions. Seeking out diverse perspectives. Talk to other investors and financial professionals to get different viewpoints on the market. Setting clear investment goals. Establish well-defined investment goals and stick to your plan, even when the market is volatile. Using quantitative analysis. Rely on data-driven analysis to make investment decisions, rather than relying solely on intuition or emotion. Conclusion. Cognitive biases can have a significant impact on investment decision-making. By understanding common cognitive biases and taking steps to avoid them, investors can improve their decision-making process and increase their chances of achieving long-term financial success. The importance of focus. Rather than trying to spread their investments too thin, investors should focus on a particular area of the market where they have a competitive advantage. By specializing in a specific sector or asset class, investors can develop a deep understanding of the underlying dynamics and make more informed decisions. It is important to recognize one's strengths and weaknesses and focus on areas where one has a comparative advantage. This may involve conducting in-depth research, building relationships with industry experts, or developing proprietary analytical tools. Conclusion. Avoiding the pitfalls of hive minds, cognitive biases, complex financial instruments, and a lack of focus is essential for long-term investment success. By conducting thorough due diligence, understanding common psychological traps, and specializing in areas of expertise, investors can make more informed decisions and increase their chances of achieving their financial goals. Chapter 3. Building a Sustainable Investment Strategy. The pursuit of financial security and wealth accumulation requires a well-crafted investment strategy. This chapter explores the key elements that can help investors build a sustainable and successful approach to investing. Knowledge is a fundamental building block of successful investing. By acquiring a deep understanding of specific sectors, asset classes, and economic trends, investors can make more informed decisions and identify potential opportunities. In the dynamic world of finance, continuous learning is essential to stay ahead of the curve and navigate the ever-changing landscape. The importance of fundamental analysis. Fundamental analysis involves evaluating the intrinsic value of an investment based on factors such as financial statements, industry trends, and economic conditions. By understanding the underlying fundamentals of a company or asset, investors can make more informed judgments about its potential for growth and profitability. The role of technical analysis. Technical analysis involves studying historical price data to identify patterns and trends that may indicate future price movements. While technical analysis can be a valuable tool, it is important to use it in conjunction with fundamental analysis to get a complete picture of an investment's prospects. The value of economic analysis. Economic analysis involves studying macroeconomic factors that can impact investment markets, such as interest rates, inflation, and GDP growth. By understanding the broader economic environment, investors can make more informed decisions about asset allocation and risk management. The benefits of continuous learning. The investment landscape is constantly evolving, and staying informed is essential for making sound investment decisions. By continuously learning and staying updated on market trends, economic indicators, and industry developments, investors can gain a competitive edge and identify emerging opportunities. Conclusion. Knowledge is a powerful tool in the world of investing. By acquiring a deep understanding of fundamental analysis, technical analysis, and economic analysis, investors can make more informed decisions and increase their chances of achieving long-term financial success. Continuous learning is essential in the dynamic world of finance, and by staying informed, investors can stay ahead of the curve and navigate the ever-changing landscape. Diversification, a cornerstone of risk management. Diversification is a fundamental principle of investing that involves spreading your investments across different asset classes, sectors, and geographic regions. By diversifying your portfolio, you can reduce your exposure to specific risks and improve the overall stability of your investments. The role of asset allocation. Asset allocation refers to the process of determining the proportion of your investment portfolio that should be allocated to different asset classes, such as stocks, bonds, and cash. A well-balanced asset allocation can help you achieve your investment goals while managing risk. The importance of rebalancing. Over time, the relative performance of different asset classes can change. It's important to periodically rebalance your portfolio to ensure that it aligns with your original asset allocation strategy. Rebalancing involves selling assets that have outperformed and buying those that have underperformed to maintain your desired allocation. Conclusion. Building a sustainable investment strategy requires a combination of knowledge, discipline, a long-term perspective, and practical experience. By focusing on these key elements and incorporating diversification, asset allocation, and rebalancing into your approach, you can increase your chances of achieving your financial goals and building a secure future. Chapter 4. Finding your path to financial success. The journey to financial success is unique to each individual. While there are common principles and strategies that can guide investors, it's essential to find a path that aligns with personal interests, values, and risk tolerance. This chapter explores the importance of passion, mentorship, and personal development in achieving financial success. Investing in areas that you are genuinely passionate about can make the journey more enjoyable and rewarding. When you're invested in a sector or asset class that you care about, you're more likely to stay informed, conduct thorough research, and make informed decisions. This chapter explores the importance of passion in investing and how to find your niche. The power of passion. Passion is a powerful motivator. When you're invested in a sector or asset class that you're truly excited about, you're more likely to stay engaged and motivated, even during challenging times. This passion can fuel your research, drive your decision-making, and increase your overall satisfaction with your investments. Finding your niche. Identifying your investment passions can be as simple as reflecting on your interests and hobbies. Consider the industries or sectors that you follow closely or that you find particularly intriguing. Are you fascinated by technology, renewable energy, or emerging markets? Once you've identified your niche, you can start researching investment opportunities within that sector. The benefits of passion-driven investing. Investing in areas that you're passionate about can offer several benefits. Increased engagement. When you're invested in something you care about, you're more likely to stay engaged and informed. Enhanced decision-making. Passion can fuel your research and help you make more informed decisions. Reduced risk aversion. When you're genuinely excited about an investment, you may be less risk-averse and more willing to take calculated risks. Greater satisfaction. Investing in areas that align with your values and interests can provide a sense of fulfillment and satisfaction. Examples of passion-driven investing. Here are a few examples of how passion can drive investment decisions. Technology enthusiast. An individual who is passionate about technology might invest in tech stocks, tech-focused ETFs, or venture capital funds that support innovative startups. Environmental advocate. Someone who cares deeply about the environment might invest in renewable energy companies, sustainable agriculture, or socially responsible funds. History buff. A history enthusiast might invest in historical artifacts, collectibles, or real estate properties with historical significance. Conclusion. Investing in areas that you're passionate about can make the journey more enjoyable, rewarding, and successful. By identifying your niche and pursuing investments that align with your interests, you can create a portfolio that is both financially sound and personally fulfilling. Personal development. Personal development plays a vital role in achieving financial success. While knowledge and strategy are essential, cultivating the right mindset and behaviors can significantly impact your investment journey. This chapter explores the importance of personal development and offers practical strategies for building the qualities necessary for financial success. Discipline and patience. Discipline and patience are two essential qualities for successful investors. Discipline involves sticking to your investment plan, avoiding impulsive decisions, and resisting the urge to chase short-term gains. Patience is equally important, as it allows you to weather market fluctuations and stay focused on your long-term goals. Emotional resilience. The investment world can be emotionally demanding, with periods of both gains and losses. Emotional resilience is the ability to cope with setbacks and remain calm under pressure. Developing emotional resilience can help you avoid making impulsive decisions based on fear or greed. Continuous learning. Personal development is an ongoing process. Continuous learning is essential for staying informed about market trends, economic indicators, and investment strategies. Consider taking courses or workshops on personal finance, investing, or behavioral finance to enhance your knowledge and skills. Building a growth mindset. Adopting a growth mindset is crucial for financial success. A growth mindset is the belief that your abilities can be developed through dedication and hard work. This mindset encourages you to embrace challenges, learn from mistakes, and persist in the face of setbacks. Practical strategies for personal development. Here are some practical strategies for developing the qualities necessary for financial success. Set clear goals. Define your financial goals and create a roadmap to achieve them. Practice mindfulness. Mindfulness techniques can help you manage stress, reduce anxiety, and improve decision-making. Seek mentorship. Learn from experienced investors and seek guidance from mentors who can offer valuable advice. Join investment communities. Connect with like-minded individuals and share experiences and knowledge. Celebrate successes. Acknowledge your achievements and reward yourself for your progress. Conclusion. Personal development is an essential component of financial success. By cultivating discipline, patience, emotional resilience, and a growth mindset, you can enhance your investment journey and increase your chances of achieving your financial goals. Finding your path to financial success is a personal journey. By pursuing your passions, learning from others, and developing your personal skills, you can create a sustainable and fulfilling investment strategy. Remember, the key to success is not just about making money. It's about building a financial future that aligns with your goals and values. Chapter 5. The Power of Mindset. The human mind is a powerful tool that can shape our reality. Our thoughts, beliefs, and attitudes have a profound impact on our personal and professional success. This chapter explores the importance of mindset and how it can influence our lives. Negative thoughts can have a detrimental impact on our mindset and overall well-being. They can create self-doubt, limit our potential, and hinder our progress. This chapter explores the toxic influence of negative thoughts and offers strategies for overcoming them. The power of negative thinking. Negative thoughts can be insidious, often creeping into our minds without our conscious awareness. They can create a self-fulfilling prophecy, limiting our beliefs and actions in ways that prevent us from achieving our goals. Common negative thought patterns. Some common negative thought patterns include catastrophizing, exaggerating the negative consequences of a situation. All-or-nothing thinking, viewing situations in black and white terms, with no room for nuance or compromise. Overgeneralization, drawing broad conclusions based on a single negative event. Personalization, blaming oneself for negative outcomes, even when they are beyond one's control. The impact of negative thoughts. Negative thoughts can have a significant impact on our mental health. They can contribute to anxiety, depression, and low self-esteem. Relationships. They can strain our relationships with others and create conflict. Career. They can hinder our professional success and limit our opportunities. Overall well-being. They can negatively impact our physical health and overall quality of life. Challenging negative thoughts. To overcome the toxic influence of negative thoughts, it is essential to challenge them and replace them with more positive and constructive thinking. Here are some strategies for challenging negative thoughts. Identify the negative thought. Become aware of your negative thoughts and identify the specific thought patterns that are affecting you. Question the validity. Ask yourself if the negative thought is truly accurate or if it is based on assumptions or biases. Replace with a positive thought. Replace the negative thought with a more positive and constructive statement. Practice mindfulness. Mindfulness techniques can help you become more aware of your thoughts and emotions, allowing you to challenge negative thinking patterns. The transformative power of positive affirmations. Positive affirmations can be a powerful tool for shifting our mindset and fostering positive beliefs. By repeating positive statements to ourselves, we can reprogram our subconscious mind and cultivate a more optimistic outlook. Creating effective affirmations. When creating affirmations, it is important to use positive language. Avoid using negative words or phrases. Be specific. The more specific your affirmations, the more effective they will be. Use the present tense. Write your affirmations as if they are already true. Repeat regularly. Repeat your affirmations daily, preferably in the morning and evening. Conclusion. Negative thoughts can have a detrimental impact on our mindset and overall well-being. By recognizing the toxic influence of negative thinking and implementing strategies to challenge them, we can cultivate a more positive and empowering mindset. Additionally, using positive affirmations can help us reprogram our subconscious mind and create a more optimistic outlook. Avoiding complaining, speculating, and judging. Our thoughts and behaviors have a profound impact on our mindset, relationships, and overall well-being. Complaining, speculating, and judging others can create a toxic environment and limit our ability to think creatively and positively. This chapter explores the importance of cultivating a more constructive and compassionate mindset. The negative impact of complaining. Complaining can have a detrimental effect on our mental and emotional health. It can create a negative energy that spreads to others, contributing to a toxic environment. Additionally, complaining can limit our ability to find solutions and take action. The dangers of speculation. Speculation can lead to unnecessary stress and anxiety. It can also cloud our judgment and prevent us from making informed decisions. Instead of speculating, it is important to focus on facts and evidence. The harm of judging others. Judging others can create division, resentment, and negative relationships. It can also limit our ability to see the humanity in others and connect with them on a deeper level. Cultivating gratitude. Gratitude is a powerful tool for shifting our mindset and improving our overall well-being. By focusing on the positive aspects of our lives, we can cultivate a more optimistic outlook and reduce stress. Constructive thinking. Constructive thinking involves focusing on solutions and possibilities rather than dwelling on problems and limitations. By adopting a constructive mindset, we can overcome challenges and achieve our goals. Empathy and compassion. Empathy and compassion are essential for building positive relationships and creating a more harmonious world. By understanding and caring about the experiences of others, we can foster empathy and compassion. Conclusion. Our mindset plays a crucial role in shaping our reality. By cultivating a positive mindset, avoiding negative thought patterns, and focusing on self-belief and visualization, we can overcome obstacles, achieve our goals, and create a more fulfilling life. Chapter 6. Self-care as a foundation for success. Self-care is often overlooked or treated as a luxury, but it is essential for achieving optimal performance and creativity. This chapter explores the crucial role of self-care in our overall well-being and how it can contribute to our success. The detrimental effects of exhaustion. Exhaustion can have a significant negative impact on both our mental and physical health. When we are constantly stressed and overworked, our cognitive abilities decline, our productivity suffers, and we are more susceptible to illness. It is essential to prioritize self-care to prevent burnout and maintain a healthy balance in our lives. The importance of routines. Establishing routines can help us prioritize self-care and create a more structured lifestyle. By incorporating self-care practices into our daily routines, we can ensure that we are taking care of ourselves consistently. Nourishing the brain. Our brains require adequate nutrition to function optimally. Eating a healthy diet that is rich in fruits, vegetables, whole grains, and lean protein can help improve cognitive function, boost energy levels, and reduce stress. The power of sleep. Sleep is essential for both physical and mental health. Getting enough quality sleep can help improve mood, memory, and overall well-being. It is important to create a relaxing bedtime routine and ensure that your sleep environment is conducive to rest. Embracing the morning. Many people find that mornings are a productive time for creativity and focus. By establishing a morning routine that includes activities such as meditation, exercise, or journaling, you can set yourself up for a successful day. Self-care practices. In addition to nutrition and sleep, there are many other self-care practices that can help you relax, reduce stress, and improve your overall well-being. Some examples include massage. Regular massages can help relieve tension, reduce stress, and improve circulation. Stretching. Stretching can help improve flexibility, reduce muscle tension, and improve posture. Infrared sauna. Infrared saunas can help detoxify the body, improve circulation, and reduce stress. Mindfulness meditation. Mindfulness meditation can help you become more present and reduce stress and anxiety. Spending time in nature. Spending time in nature can have a calming and restorative effect on the mind and body. Chapter 7. Overcoming Envy and Cultivating Self-Worth. Envy is a common human emotion that can have a detrimental impact on our mental health and well-being. It can erode our self-esteem, create feelings of inadequacy, and hinder our personal growth. This chapter explores the nature of envy and offers strategies for overcoming it and cultivating a healthy sense of self-worth. The deceptive nature of social media. Social media platforms often present a curated and idealized version of reality, showcasing the highlights of people's lives while obscuring the challenges and insecurities they may be facing. This can create a false sense of perfection and lead to feelings of envy and inadequacy. It is important to remember that what we see on social media is often a carefully constructed facade. The negative impact of envy. Envy can have a toxic effect on our self-esteem and relationships. When we are envious of others, we may feel resentful, bitter, and unhappy. This can lead to negative thoughts and behaviors that can harm our mental health and our connections with others. Cultivating self-worth. Cultivating a healthy sense of self-worth is essential for overcoming envy. When we believe in ourselves and our abilities, we are less likely to compare ourselves to others and feel inadequate. Here are some strategies for cultivating self-worth. Practice self-compassion. Treat yourself with kindness and understanding, just as you would treat a friend. Focus on your strengths. Identify your strengths and celebrate your achievements, no matter how small. Set realistic goals. Set achievable goals and celebrate your progress towards them. Challenge negative thoughts. When negative thoughts arise, challenge them and replace them with positive affirmations. Surround yourself with positive people. Spend time with people who support and encourage you. Overcoming envy. Overcoming envy requires a conscious effort to shift our mindset and focus on our own growth and development. Here are some strategies for overcoming envy. Practice gratitude. Focus on the positive aspects of your life and cultivate a sense of gratitude. Avoid comparisons. Resist the urge to compare yourself to others and focus on your own journey. Celebrate others' success. Find joy in the success of others and avoid feeling threatened by their achievements. Seek professional help. If you are struggling with envy or low self-esteem, consider seeking help from a therapist or counselor. Chapter 8. Unconditional Self-Love and Authenticity. Unconditional self-love and authenticity are essential for personal growth and fulfillment. This chapter explores the transformative power of embracing oneself deeply and letting go of the need to conform to societal expectations. The power of self-love. Unconditional self-love means accepting oneself without judgment or criticism. It involves embracing our unique qualities, quirks, and imperfections. When we love ourselves unconditionally, we radiate a positive energy that attracts others and creates a more fulfilling life. The illusion of perfection. Many people strive for perfection, believing that they must be flawless to be worthy of love and acceptance. However, this pursuit of perfection can lead to feelings of inadequacy and self-doubt. It is important to remember that everyone has flaws and imperfections, and that's what makes us unique and human. Embracing uniqueness. Our unique qualities are what make us special and attractive to others. By embracing our individuality, we can stand out from the crowd and create a strong personal brand. When we are authentic, we are more likely to connect with others on a deeper level and build meaningful relationships. Letting go of the need to impress. Many people feel the need to impress others and conform to societal expectations. This can lead to a false sense of self and prevent us from being truly authentic. When we let go of the need to impress, we can be more genuine and connect with others on a deeper level. Sharing vulnerabilities. Sharing our vulnerabilities can be scary, but it can also be incredibly liberating. When we are authentic and share our true selves, we create a sense of connection and trust with others. Vulnerability can also help us break down barriers and build stronger relationships. The benefits of self-love and authenticity. When we embrace self-love and authenticity, we can experience a number of benefits, including increased self-esteem. Loving ourselves unconditionally can boost our self-esteem and confidence. Stronger relationships. Authenticity and vulnerability can help us build deeper and more meaningful relationships. Reduced anxiety and stress. Embracing our true selves can help reduce anxiety and stress. Increased happiness and fulfillment. When we are authentic and love ourselves, we are more likely to experience happiness and fulfillment. Conclusion. Unconditional self-love and authenticity are essential for personal growth and fulfillment. By embracing our unique qualities, letting go of the need to impress, and sharing our vulnerabilities, we can create a more authentic and fulfilling life. Remember, you are worthy of love and acceptance, just as you are.